Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
First up, let's take a look at the Asian markets. They are lower in early trade as investors digested fresh developments come by in the escalating trade dispute between the US and China. However, despite a 1% plus cut seen across Wall Street indices, we're seeing some recovery come by in the Asian indices. The dollar yen a little stronger than what it was yesterday, 109.5. Some weakness seen on the Nikkei, down about 1/3%, but it has recovered from the lows, so watch out for that. Key stocks like Toyota as well as SoftBank not doing too well in that index. The Korean markets lower too, still off the lows, currently sitting with a cut of close to around 0.5%. Straits as well as Taiwanese indices too sitting in the red as we speak. The Straits has recovered, now moved into the green as we speak. The SGX Nifty indicates a cut of about 30 points, 10,723 thereabouts is where the ballpark is set as far as open is concerned.
Okay, well, let's tell you about Wall Street then. It was a weak day for the markets as Wall Street braced for more actions against Chinese companies by the Trump administration. So the Dow dropped over 300 points while the S&P 500 fell 1.5%. Technology shares declined 2.3% and the Nasdaq ended 2% lower. CNBC's Aditi Roy gets us a wrap of all what took place on Wall Street.
All right, thanks a lot for that. Meanwhile, there were conflicting messages coming in from within White House. On one hand, Treasury Secretary Steven Mnuchin said the measures will not be specific to China, but to all countries that are trying to steal US technology. On the contrary, White House National Trade Council Director Peter Navarro told CNBC that there were no plans, and I quote, no plans, to impose restrictions targeting foreign investments.
Okay, trying to assuage concerns, but hardly really helped the US markets. The Dow closed below its 200-day moving average. But let's also listen in to what Frederick Newman of HSBC makes of the ongoing trade tussle.
All right, meanwhile, across Atlantic, we saw sharp cuts in the European markets as well. Markets closed significantly lower on trade concerns as well as the effect of Brexit. Remember, the FTSE and the DAX closed more than 2% in the red, while the French index CAC ended with a cut of over 100 points, near 2% cuts seen there. In the periphery, we saw sharper cuts, 2.5% of the Italian index as well as the Greek index, all of them ending much lower. The Italian index down by about 2.5%. In that situation, but what actually outperformed were the emerging markets. The Russian index ended with a cut of just about 0.5%, while if you take a look at the Brazilian index, that one saw a gain of close to around 0.5%. So sharp cuts across the European indices, a cut on the Russian index as well, the Brazilian index only outperforming.
All right, well, let's tell you about the currency space. The dollar index steadies after falling in the overnight session, however, continues to trade weak against the Japanese yen. The dollar index as a whole is moving away from its 11-month highs that it hit earlier.
In the world of commodities, oil prices steady after falling in the US session after OPEC agreed to raise production as US equity markets slipped on trade war fears.
All right, time for a quick break now, but up next, all the cues and news you need to work with for trade this morning.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now let's just focus back home on Dalal Street. Yesterday, well, we saw a weekday of trade. Volatile but weak. It ended lower by about 60 points on the Nifty. Nifty managed to hold on to the 10,750 mark. The Sensex shared over 200 points. Mid-caps too ended with a cut of about 0.5%. So, Ekta, what are the cues stacked up in terms of today's trading session?
Well, like you mentioned, Mangalam, yesterday the Nifty ended below 10,800. The Sensex also slipped around 200 odd points. And most of this kind of weakness came in the second half of the trading session. And that was actually at a time where the Dow futures were down over 150 points as well. And we discussed this during the Facebook Live that we did last evening, that maybe there was some amount of a correlation with regards to that, because most of the trading session yesterday, we were largely consolidatory in nature. Interestingly, the FI DII's net bought around 200 odd crores in the cash market. I couldn't really go back and see when was the last time they did buy in the cash market because it was so long ago. But nonetheless, that would be a positive. But let's see if it's just a flash in the pan, because that's happened many times, and whether there's any sort of one-off attached to that. DII's net sold 86 odd crores, so that too was a first time in many weeks. So let's see whether that sustains and whether that is a trend. Separately, for today, what are the cues that we need to work with? US markets weak. Dow ended below its 200-day moving average. Trump, there were clarifications which came in from the White House that there are no plans to curb Chinese, to put any sort of curbs and restrictions on China or any other countries, but that didn't really assuage any sort of concerns with regards to what's happening with the US markets. Europe closed sharply lower on these trade war concerns as well, and you can see the impact on Asia, where most of Asia is lower, and the SGX is also indicating that it could be a start in the red again. Brent crude, no dramatic shift there, so it's still within a range of $74 to $75 per barrel. Most of the street is watching for a range of around 10,500 to 10,800 for the Nifty. The 20-day moving average stands as the first a big factor to watch out for, where the level is 10,742. In terms of cues to watch for flight to safety stocks gaining more, so that dichotomy continues to increase in the market. The Bajaj Finances, Finserv's gain, but some stocks continue to decline, such as PSU banks. June expiry this week, so that's the other big cue to watch out for this Thursday. And obviously the monsoon, we can see the impact right outside our windows, where it's currently still dark, and I can still see that, but it has hit Gujarat, and the progress will be closely watched.
Absolutely, Ekta. And the other stocks that you're watching out for in trade today?
Well, in terms of stocks to watch out for, in terms of news, I would be watching out for something like a Ratnamani Metals and Tubes. They've received a domestic order. Info Edge, which has entered into an agreement with SVF India to invest $45 million. Jet, agreement with Boeing for a purchase of an additional Boeing aircrafts. V2 Retail, where the auditor has given a qualified opinion for 2 issues, so that's going to be important. NOSIL, the company has commissioned phase 1 of expansion. Kotak has clarified that HDFC and Kotak Bank on the PNB housing story, whether they're eyeing stake, and they said that is speculative. Orchid Pharma, the resolution plan has received an affirmative vote of 78.6% by the Committee of Creditors. Oil India, there's a hydrocarbon discovery by Oil India in the KG Basin, something to watch out for. Sharda Cropchem has approved fundraising. And in terms of other news, Corporate Affairs Ministry is probing 22 listed companies for suspected misuse of funds through IPOs. IDBI Bank, RBI veterans are worried about the LIC IDBI deal. And Fortis, the board meet continues today. So I expect the stock to be in the red there.
All right, Ekta, thanks a lot for that. With that, we'll step into a short break. But up next, we'll get you an exclusive conversation with the Minister of State for Aviation, Jayant Sinha, on whether LIC will bail out Air India or not. Stay tuned. Welcome back. This is Power Breakfast on CNBC TV18. Now let's move on to our top story. I will not speculate and I will not be pinned down. This was the response from the Minister of State for Civil Aviation, Jayant Sinha, when asked about the possibility of LIC buying stake in Air India. Speaking exclusively to Shireen Bhan, Sinha made it clear that the government is, I quote, considering all alternatives in national interest. Here is a snippet of that conversation.
Market conditions and industry dynamics are such that today people would not be that enthused about the disinvestment process that was underway as far as Air India is concerned. And of course, if we look at how various airlines are doing around the world, particularly the full service carriers, you'll see that higher oil prices, currency fluctuations, higher interest rates have sharply brought down profitability. So therefore, I think the conclusions industry watchers that we would have to come to is that the expression of interest was not sufficiently of interest to various.
First tenure of the NDA government, and the government continues to hold on to the residual stake that they hold in these companies, and that is why potential bidders were wary of the government wanting to hold on to 24%.
Shireen, there are many other instances that would argue exactly the opposite. For instance, if you look at the holdings that we have in some banks like Axis and ICICI, government has of course continued its passive financial stake. It has not interfered in any operational way with those companies. If you look at Maruti, for instance, where government had a stake for a long period of time, eventually government did exit from those. So obviously there are arguments to be made on both sides. At the end of the day, as far as the offer for sale, what we had put up in terms of terms and conditions for the sale are concerned, I think they were very balanced. They were, I think, taking into account all the various different stakeholder interests that we had to consider. And therefore, our objective of ensuring that Indians had an independent, globally competitive airline which could fly long haul around the world, those being our overriding objectives were fully maintained through this very balanced offer for sale that we had put out.
What now, Mr. Sinha, as far as Air India is concerned, are you going to attempt to take the disinvestment process forward at this point? Will you rework the terms that had been put in place in the EOI, or is the divestment off the table altogether for now? And my second question, and I'll ask you this in the context of what we're already seeing with LIC potentially getting ownership of IDBI Bank, there have been reports suggesting that LIC could even be brought into Air India. Is that a realistic possibility?
Again, Shireen, I cannot speculate to the future. You understand the decision-making process that has been established within government for these kinds of situations. We have an executive committee of joint secretaries. We have a core group on disinvestment, which is chaired by the cabinet secretary. Then we have a very senior group of ministers, which is the Air India specific alternative mechanism that monitors the situation and then takes decisions. So we have multiple decision layers. We will be monitoring the situation as we move forward, and whatever is in the best national interest, you can be sure that all of these very accomplished and capable professionals and senior decision makers will make whatever is in the right national interest and take that forward,
including possibly bringing LIC on board to fund Air India. Has that been discussed in any fashion at all, Mr. Sinha?
Shireen, you're asking me once again to speculate. I've already told you.
No, I'm asking you if this has been discussed in any form of fashion.
We are considering all alternatives that will be in the national interest, and we will take them through the process and undertake those decisions that are the best for the people of India.
All right, so with that, we'll slip into a short break. Come back, we talk about the LIC IDBI Bank deal buzz that has worried the RBI veterans. Details on that once we're back. Keep it with Power Breakfast.